This is going to be a video on how to get into a credit spread and what it is. I'm not going to talk about how I utilize them, but I'm going to show you two examples here on Costco as well as Mara. If you'd like to know how I get in them, you can join the Discord, which is in the description. So we're going to pull up Costco here. All right, I'm betting that Costco wouldn't hit 690. When I'm doing a credit spread, I'm simply betting where a stock won't go or that it will run flat. When I'm selling a bear call spread, I'm selling a call, that means I'm bearish. If I'm selling a put, that means I'm bullish. Why is it flashing green and red? I don't know, but let's go ahead and go into the position that I have, and we're going to show you the math. I sold, remember when you're doing a credit spread, you sell the closer in and you buy the further out. The wider you go on this spread, if I keep it tight, the less risk I have and the less reward. The wider I go, the more risk, more reward. So let's go ahead and take a look. I had got in this because they're releasing a large dividend, and stocks usually don't go up when they do that. Do I want to buy a put? No, because the IV is going to be going up because everyone's buying puts, and when they release it, then it's going to get premium crushed. So you can't win on the buy side. So that's why I'm going in on the sell side. I sold, we have a calculator up here, these 690s. I'm already in this, not on Robinhood, on my Fidelity account. Sold these 690s for $300, okay? And I bought as a hedge. That's what a credit spread is. You are hedged because you're not naked. Most brokers aren't going to let you do that. Bought a $700 call for $190, minus $190. I make the difference. I make the difference. That's not the price now. That was the price when I got in. I make the difference between $300 and $190, which is $110. I'm betting I'm either neutral or I'm bearish. I'm betting that it will not hit Costco, which is all the way down here at this 644 price, will not hit $690. And I let it expire worthless. Okay? So we're going to do keep in mind, you can get out of this whenever you'd like. And the way you get out of it is by buying the position back. Right? So I sell to enter and I'm buying to exit in a way here. Let's take a look at Mara. Let's say I'm bullish on Mara, and I think that she's not going to fall any further. Mara's currently trading at $24. I can bet that it won't hit 20 bucks by selling a put. Now I can cover myself and have little risk by buying a 19 put. Let's look at the max loss down here. Max loss is $49, max profit is $51. All Mara has to do is not hit 20 bucks. It can drop down close to 20, it can run up, and it can run flat and chop around. Right? So the probability goes up. So if I was very confident, I could go wider. Okay, now the max loss is $107, max profit's $93. I now have more risk but more reward. And so especially when a stock let's go over here and just check the IV on this. Especially when a stock has an IV of 148, that is insane. The rot on this is going to be nuts. You can get theta crushed if this thing runs neutral. So all the people buying puts because it's high are going to get eaten alive to theta. So keep in mind, everything's opposite now. When you buy a put, you want the contract to go up in value, right? And you don't want it to expire. You want to get out before it expires. And you don't get your money back till you sell it. When I'm selling on the sell side, that money is credited to me immediately. Let's do this one more time. Selling a 20, buying a 19. What is the difference between 233 and 274? 41 bucks. That's how much I can make. Right? It doesn't go up in value. This drops from 41 to 0. That's my profit. Letting it expire worthless at 0, max profit. It goes to 0 and I want to get out of it, or a cent, I can exit it for a cent. What's 1 cent minus 41? $40 profit. You can get out of it whenever you'd like. So this is how you get into a credit spread and what it is. By the way, I only use credit spreads during certain conditions. So using credit spreads only as swinging constantly like that, eventually you're going to blow up. I've done this before. I ran a credit spread challenge, and the portfolio, it took me about a year to grow it, and I was good. I was very accurate. I was constantly in something and constantly winning. I grew the portfolio 36% in under a year, about 8 months or so. Profit wasn't too good. Cash secure puts are a way better strategy in the wheel. But for the sake of that challenge, I grew at 36%. And I had a credit spread, a bear call spread on Netflix. They came out with really good data on how many subscribers they had, and it exploded. And it set me back almost to the beginning. And I grew it back up again. You know, I did this for over a year, this credit spread challenge account. You know, and the profits weren't that good. It's one thing if you're a bad trader. It's another thing when your accuracy is like, you know, you're hardly ever losing and you're always winning. But the math just doesn't work out. Your max loss is $400 and your max profit is, you know, 20 bucks. That math doesn't work. You may take one step forward, but if you take a loss, which you will, every trader is going to take a loss. You're never going to be 100% accurate. Depends on how bad that loss is, though. Take one step forward and 3 steps back. There are times when I would utilize a credit spread, but it's not going to be something that I'm doing every day. Certain scenarios like Costco that's about to release a pretty large dividend, me betting that it wouldn't go up, and did it go up? It hasn't gone up. I did it right over in here somewhere over in here is where I sold that about $20 out of the money, that bear call spread on Costco, betting that it won't hit 690. It'll either run flat, it will go up but not hit 690, or go down. I bet that it went down, and it went down. So I was correct there. So in this scenario, this is a fantastic scenario and example to use that I can use for whenever a profitable credit spread that I've done in a really good scenario. If you guys like this content, make sure to like and follow for more.